Good morning. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, bringing you the morning comment for the 14th of March. People's Bank of China says no excessive stimulus is needed. The People's Bank of China governor said over the weekend that no excessive policy easing is needed to achieve the nation's growth target, unless there is a big economic shock. However, after the governor's speech, Chinese industrial output and retail sales both slowed more than expected, while fixed asset investment beat expectations. Despite the soft overall data for the first 2 months of the year, risk sentiment was elevated, with the Shanghai Composite ending its session in the positive territory. Japan's Nikkei 225 was also supported by the improvement in the confidence and closed in the green as well. Sentiment could remain strong and roll into European equity markets, and pro-risk currencies such as the Australian dollar and the New Zealand dollar could see some further demand. Elsewhere, the party of German Chancellor Angela Merkel and her open-door refugee policy has suffered defeats in 2 of 3 state elections on Sunday. The election results delivered historic gains for the AfD and anti-immigrant party, and showed how the migration crisis is scrambling politics in Europe's largest economy. The elections were seen as a test of support for Chancellor Merkel's policy of accommodating refugees, and the results are not so encouraging. The success of the populist AfD shows how strongly some German voters disagree with Merkel's pro-refugee stance. Even though the markets are not putting much emphasis yet on the EU migration crisis, if this uncertainty continues to erode Germany's ruling party, we could see euro coming under pressure in the following weeks. As for today, Eurozone's industrial production is forecast to have risen in January, a turnaround from the previous month. As for the speakers, we have only one ECB Governing Council member speaking during the day. As for the rest of the week, on Tuesday, the spotlight will be on the Bank of Japan policy meeting. Expectations are for the Bank of Japan to stand pat at this meeting, as it may prefer to monitor the impact of negative rates on the economy before it starts making plans for its next step. Nevertheless, the bank could reaffirm its easing bias and suggest that they may ease further in order to achieve their inflation target. As a result, the reaction in the yen will primarily depend on the tone of the statement accompanying the decision. Wednesday is FOMC day. The committee gathers to decide on the policy and to publish its updated forecast for the Fed fund rate path and the US economic outlook. Investors are all but certain that the Fed will not change its policy rate at this meeting, so the focus will shift on the economic updates and the famous dot plot. We believe that the dot plot is likely to be revised down at this meeting and come closer to market expectations of one hike this year. The FOMC will have to adopt a cautious stance in light of the global risk in order to not upset investors with regards to the US economic outlook and in order to keep its options open for the coming months. From the indicator frontier, we get the US CPI for February and the UK employment report for January. On Thursday, we have a very busy day with 3 major central bank meetings: the Bank of England, the Swiss National Bank, and the Norges Bank. The Bank of England kept rates unanimously unchanged at the previous meeting, with the lone dissenter Ian McCafferty unexpectedly withdrawing his hike vote. Investors' attention is still on the EU referendum, and since the polls appear to be very tight, we believe that the bank will remain on hold at least until the outcome is known. The increasing risk of a potential exit have also raised the possibility for even a rate reduction in the not-too-distant future. While we expect the bank to stand pat at this meeting, the focus is likely to shift on the minutes of the decision, in order to gauge how much policymakers are concerned about the Brexit and if a rate cut is a strong scenario in such a case. The Swiss National Bank took the sidelines when it last met, but repeated that the franc is overvalued and that it stands ready to ease further or even intervene in the FX market if this becomes necessary. S&P President Jordan recently reaffirmed the bank's readiness to act, but we believe this is quite unlikely to happen at this meeting, given the aggressive ECB easing on Thursday fell short of weakening Euro CHF significantly. if the massive stimulus package introduced by the ECB gradually weakens Euro CHF, then the SNB is possible to reconsider its policy and could ease further even outside its scheduled policy meetings, which was the case for the latest 2 SNB rate cuts. The Norges Bank also held its fire at its preview gathering, but noted that if economic developments are broadly in line with its projections, the policy rate may be reduced further in the first half of 2016. Even though the outlook appears bleak and the market expectations are for a rate cut, we believe that the bank is likely to remain on hold at this meeting as well. We expect that the recent recovery in oil prices and expectations that the government's budget due out in May will be expansive enough to support economic growth. This may keep policymakers on hold at least until June. Finally, on Friday, the Bank of Japan releases the minutes of its January policy meeting, where officials surprised the markets and introduced negative interest rates by a 5-4 vote. We will look through the minutes for additional insights regarding the decision, especially since Governor Kuroda stated approximately a week prior to the meeting that negative rates were not being considered. For more information, including technical analysis, please read the full comment on IronFX.com. or download our app and get all the information you need to trade delivered directly to you. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, wishing you solid trading.